Hello and welcome back to Mr. Rich. In today's video, I'm going to walk you through my personal trading journey, starting with just $80 in real capital, using a method I've developed and refined over time. This isn't just about placing random trades. Behind every position I take, there's a solid framework, technical structure, trend validation, precise risk control, and most importantly, disciplined execution. This video isn't here to show off numbers. It's here to prove a point, that with the right tools, the right mindset, and consistency over hype, small capital can grow significantly without emotional trading, without overexposure, and without shortcuts. What you'll see here is 100% real trading. No top-ups, no filters, no fakes. So if you truly want to understand how this strategy works from the ground up, watch closely and learn from every detail. And if you're ready to go deeper and learn the strategy directly from me, I'll share how you can join my VIP group later in this video. Now let's begin. From $80, let the market speak for itself. I took a buy position here because I noticed a clear gap between these two bullish candles. And importantly, this gap appeared right after price broke above the red line, which was previously acting as a resistance level. In many cases, a gap following a breakout is a strong sign of buyer momentum. And that gave me a solid technical reason to take this entry. Let's see. Did this trade end in profit? Okay, profit. Price moved upward as expected, and that gap confirmed the strength behind the trend. Now, let's open the market again and look for the next clean opportunity. Remember, it's not about rushing trades, it's about reading the structure and entering with confidence. I entered a buy position here because the latest candle just touched the red line and showed a strong rejection at that level. This tells me the red line is currently acting as dynamic support, and there's a high probability that price will reverse upward from this zone. Even though there seems to be a possible downward crossover forming on the indicator, I'm not prioritizing it right now, because the candle structure itself shows strong buying pressure. And in cases like this, price action always takes priority over indicators. Let's see. Did this trade end in profit? Okay, profit. Price bounced up just as expected. Now, let's open the market again and stay focused. All right, I took a sell position here because the red line, previously acting as support, has been clearly broken by 3 consecutive bearish candles. This isn't a weak breakout. These candles closed decisively below the red line, showing strong and consistent selling pressure and confirming that the support structure has now failed. When a key level like this gets broken with momentum, the probability of a continued downtrend increases significantly. This setup didn't require further confirmation. The market structure alone was more than enough. Now let's see. Did this trade result in profit? Okay. Profit. Price continued to drop exactly as anticipated. The red line break validated the seller's control. Now, let's open the market again and prepare for the next opportunity. I entered a buy position here because the price has just touched a key support zone, a level that has previously held well against selling pressure. Shortly after touching support, we saw a clear rejection candle pushing upward, indicating that buyers are stepping back in to defend this area. In technical analysis, how price reacts at a level is more important than what indicators say. And in this case, the candle structure gave me strong enough confirmation to enter long. Let's see. Did this trade result in profit? Yes. Okay. Profit. Price bounced exactly as anticipated. Now, let's open the market again and watch for the next opportunity. I entered a buy position in this market because the current trend is clearly moving upward with strong momentum. The previous candles have consistently closed above the green line, which I use as my short-term trend indicator. In this kind of setup, it's always safer to follow the trend rather than fight it. So I entered a buy position with a 1-minute expiration, expecting the bullish pressure to continue just a little further. Let's see. Okay. Profit. Price moved upward as expected. Once again, the trend-following strategy proves effective. Now, let's open the market again and stay focused on the next opportunity. I entered a buy position here because I noticed a very strong price action signal. The last candle briefly broke below the red line, but failed to hold beneath it. Instead, a bullish candle with a long, lower wick formed, clearly showing a strong rejection at that level. This kind of reaction typically indicates that buyers are stepping back in, and it often marks the beginning of a potential trend reversal to the upside. Even though there are 2 crossover signals suggesting a possible drop, I chose to disregard them this time because the structure of the candle tells a much stronger story. Let's see. Did this trade work out? Okay. Profit. Price reversed upward just as expected. That rejection candle gave a powerful confirmation. I took a sell position here because I saw a strong bearish candle just break through the red line, and what's more important, it's a Marubozu candle, meaning it closed without upper or lower wick, indicating strong, uninterrupted selling pressure. This makes the breakout even more convincing. On top of that, there's also a clear crossover on the indicator, supporting the bearish outlook. With this combination of a strong breakout and indicator confirmation, this was a solid opportunity to enter a sell. Let's see. Did this trade end in profit? Okay. Profit. Price continued to drop as expected, and that Marubozu candle gave us the momentum confirmation we needed. Now, let's open the market again and prepare for the next setup. I entered a sell position here because the market is clearly in a sideways or ranging condition. Looking at the previous candles, it's evident that price has been moving within a tight range, and none of them have been able to break through either the support or the resistance. In this kind of setup, candle-to-candle trading around the edges of the range becomes more reliable. Right now, price is sitting right near the resistance zone, so I've taken a sell position, respecting the structure of this sideways market. Let's see. Did this setup result in profit? Okay, profit. Price dropped right from resistance, just as expected in a sideways market. Now, let's open the market again and look for the next clean structure. I entered a buy position here because the overall trend is clearly moving upward, and more importantly, the latest candle that formed is a bullish Marubozu. A Marubozu candle like this indicates that buyers were fully in control, with no visible selling pressure, which usually signals a strong continuation of the uptrend. With a combination of clear trend direction and a strong confirmation candle, I'm confident in following the upward momentum. Let's see. Did this trade result in profit? Okay. Profit. Price continued to rise as expected, and the Marubozu provided solid confirmation of trend continuation. I entered a sell position here because the latest candle clearly rejected the red line, which I've marked as a key resistance level. Price action at this zone shows that buyers failed to break through, and instead, a bearish candle formed as a sign of potential reversal. This red line has acted as a strong rejection area multiple times, so I took the opportunity to go short, expecting price to move back down. Let's see. Did this trade result in profit? Profit. Price moved down from resistance as expected. The rejection confirmed the bearish move. Now, let's open the market again. Stay focused and wait for the next clean setup. I took a sell position in this market based on a strong technical confluence. First, the last 3 candles have all closed below the red line, which was previously acting as support, and now has flipped into resistance. Second, I noticed a bullish candle that initially formed green, attempting to push upward, but ultimately got rejected and closed as a bearish candle. This type of rejection, especially after a support break, often signals that sellers have regained control and that the market may continue to drop. Let's see. Did this trade result in profit? Okay. Profit. Price dropped exactly as anticipated. The rejection candle confirmed the seller's momentum. Now, let's open the market again and continue analyzing with discipline and precision. I entered a sell position in this market because there was a clear crossover on the moving averages, where the faster MA crossed below the slower MA, signaling a potential shift in momentum to the downside. This is a classic signal used by many traders to detect early trend reversals, and in this case, it aligns perfectly with the recent candle structure showing bearish signs. Let's see. Did this trade result in profit? Okay, profit. And for this session, I've decided to stop here, as the market is starting to look less stable. As always, I only trade when the structure is clean and clear, not just for the sake of entering trades. Right now, my balance has reached over $137,000, all thanks to the compounding strategy I've developed and applied with consistent technical analysis and risk management. If you want to learn this exact strategy, or if you want to receive trading signals with over 97% accuracy, make sure to join the VIP group. Inside, I'll guide you step by step from strategy to mindset and how to survive and thrive through trading. See you in the next session. See you guys.